These next 24 to 72 hours in cryptocurrency land are very much lining up to be a magical time. And contrary to popular belief right now, I do have some data over here that might make you consider perhaps something a little bit different than what I currently see going around in social media as far as the groupthink goes. That said, welcome back to EllioTrades channel. I'm your host Crown again today with some good old TA, and actually flow analysis and quant statistics today is what we're going to be looking at. So with that in mind, we're going to talk about this over here, a little bit of quant data on actually my own application, which can be found for free, by the way, at app.crowntrading.net. Anyways, what I want to bring attention to is right here. So I'm going to remove my face in the bottom left pane where it says global open interest. What is open interest? Open interest essentially represents the amount of open contracts for derivative positions. And when it typically gets high, we do look for, either the shorts or the longs, whichever side is being a little bit more aggressive to potentially get squeezed. And in this case right here, for reference, we are just above 12 billion with a B, that is, similar to what we saw in early September and our prior all-time high, maybe not so long, maybe not so much for too longer, if that makes sense. Dyslexia speaking yet again, in mid-April at 65,000 bucks. Putting back on my face over here, we can also see that the global leverage ratio is also approaching similar levels to what we've seen in major bull traps and bear traps. I'm talking about early September, late July, actually, of which I believe we talked about this one about a couple weeks before on Ellio's channel on just a one-off appearance there. And then, of course, we did see the same sort of levels explored in middle April as well. So the market is very much over leveraged right now. And that means that we are lining up for a very volatile time. And right now, it seems like many people, presumably so, are looking for a pullback around Bitcoin's per all-time high at that $60,000 level. With that in mind, I do want to present a bit of data over here from my flow analysis. You can see that in the bottom left-hand pane over here, we have cumulative volume delta, or CVD for short. What does it essentially means? It essentially shows you which side is being a little bit more aggressive. You can see that we have several different indications over here. What we're focusing on is those derivative positions, which is going to be best represented by the term perps right here, just perpetual contracts. And we can see, and I've been following up on this for the past few days here, that we have a net short. It's technically not a net short, but what it means is that the short side is being more aggressive in the last 24-hour period of 74.19 billion, again with a B. And I can assure you that over the past few days, it has been consistently negative. So short positions on leverage have been more aggressive. These could be covering, these could be all sorts of different things, but just running with that assumption, if any side is going to be squeezed here, it is very likely to be the short side. And if short sides get squeezed, well, how do they close their positions? They long, or they get liquidated, in which they're forced to long, or close their position by buying, obviously, not necessarily the correct terminology. But now, if we're going to put this into a potential relative and actionable trading plan, I would be looking at this as very likely to first have continuation into the shallow $60,000 territory, perhaps between about 62, maybe as much as 64 to 65. Very likely then slam it back down and screw all of the breakout traders. So first things first, wash out the over leveraged people to the upside, then slam it back down on the breakout traders because they're usually the least sophisticated in general, but fair enough, not here to throw shade at anyone, but I do think that that is worth suggesting or postulating over. Of course, it always comes with an invalidation on the other side, however. I want to follow up on the short-term time frame analysis that we had over the past couple days here. We did hit our 59,500 target based upon by the confirmed bear trap back above 57,000 bucks yesterday. Holding that level was absolutely key. We have seen that thus far. Now, while things are rather extended here and it really wouldn't take too much to get a generalized pullback, I would express that while Bitcoin's likely to ebb and flow here, I would not get even short-term bearish looking for decent downside, especially as long as Bitcoin is above 58,000 bucks. Now, with that said, I want to bring you over to the 4-hour over here as well. And I'll take that one step further. I'm essentially medium-term bullish as well, looking for general sideways and up from here to those north side targets, which we'll talk about soon enough as well, as long as Bitcoin is above $56,000 on a 4-hour closing basis. If Bitcoin loses that level, that's where all of this analysis starts to go back into back to the drawing board again. And I would be first looking for a range to our prior lows of this week at around $53,500 to $54,000. Then I want to come back to it and see in real time. I would not want to have any further analysis on top of what I'm saying right now without seeing that first. Of course, there could be more downside targets after that, but one thing before the next, we do like to take this nice and easy. Anyways, over here, what we can see on our higher term timeframes following up from the prior day's analysis, we do still have targets higher at the 1.618 Fibonacci extension. Why is this relevant? It's just a common bot and algo target. And in this case right here, this market is very much driven by bots and algos. So I do like that region right there. And it's also synonymous with our last major bull trap actually in middle of April, of course, as well. So anywhere around there would be completely fine. And at that point, I would be a little bit more cautious. I'm not saying that things are destined to stop there. I just want to see the response if and when Bitcoin does get there. Again, assuming that we do not see below 56 or 58 first, depending upon what time frame you're using. Now, with that in mind, let's go over to the secondary chart over here. What's the most important thing to be aware of happening the soonest at end of day today at 8 p.m. Eastern time, by the way? Well, the 3-day is going to have a chance to do what it has been doing for 1-2, working on 3-4 closes right here, which is trending above the topside Bollinger Band, a volatility-based indicator. And as we discussed in yesterday's video, volatility is expanding right now. And so closing above the top side of this, which is currently 58,350, would very likely imply that over the next 3 to 6 days, we very likely do see that move somewhere around 62 to as much as $65,000, and then perhaps a bit of a short-term pullback around those regions. Anyways, with that said, we are 7 minutes into this video. I'd like to go over a couple of interesting alts. I think there was a lot of comments, a lot of requests for looking at symbol DOT, Polkadot. So let's just pull it up over here. I guess we can do it on this chart right here, no problem. And what do you know? We have a very similar setup over here as well, looking really, really good. Trend reversal has been confirmed, and I would be looking for a continuation back up to essentially your prior highs with any sort of a closure today above 39.50. Invalidation on this would obviously be below 36 on a daily closing basis. Until that happens, this is looking really, really good. Now, with that in mind, let's go over here to the daily and see if we're missing anything. No, not necessarily. My main disposition on this one is that it very likely will actually test around its prior all-time highs in the next 2, maybe as much as 3 weeks here, assuming that Bitcoin does not, absolutely nuke itself to oblivion. But with that in mind, this is looking like a very, very nice setup on the higher term timeframes for a retest of prior all-time highs. And then after that, perhaps in November or such, we're very likely see new all-time highs. What is another one that a lot of people are asking about? Atom, that's right, Cosmos, right? That one's popular, isn't it? Well, let's go check it out. Here we have Atom versus the dollar. And this one's looking a lot more short-term and medium-term corrective. What does that essentially mean? We expect it to go sideways at best. It had a phenomenal run, by the way, but this is very, very common stuff. After a beautiful run like this, it is a very healthy and normal thing to go through a sideways range like this. And if I had to call it right now, you're probably going to see something like this for a while. And then, assuming that the rest of the market stays healthy, this thing very likely will pull through. Obviously, there's an invalidation point on the other side as well. In this case, it would be with a daily closure below 29.25. So for right now, I wouldn't expect too much from it, more or less sideways for a while, and then very likely does try its move, assuming that it just doesn't break below that 29.25 region. Until then, short-term sideways, not too much interesting things going on right there. Again, phenomenal run prior. That's a really good sign, but this is really a setup for the next month or two to come, of which we can be very patient in these cases here. So with that said, we're nearly 10 minutes into this video here. I want to again thank you for all of the feedback on these videos. It's been really, 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 really helpful. Hopefully these are coming across in the proper way. I want to remind myself to say that while we are doing a little bit more in-depth analysis here, please understand that at the end of the day, when it comes to trading, it's always a game of statistics and probabilities. When people say things like, I know it's very common to say things like, I predicted it or exactly as predicted, whatever, that's all well and good for the YouTube algorithm. And this is specifically with trading. I can speak with confidence here as well. Have a little bit of experience myself. Not to toot my own horn there, but more importantly, I just want to kind of highlight this fact that when it comes to specifically trading, you can't really predict something. It shows that that person, may not understand, or perhaps they do understand, but maybe just for YouTube titles and whatnot, it has to be a game of statistics and probabilities, because it's always going to be a non-zero probability that what you are looking for to happen, which could be considered a prediction, will not happen. There is no 100% certainty in trading. I can assure you of that. Anytime that you think it is 100% guaranteed, that is when it typically does not happen. With that said, that is why we go over invalidation points here and why things do change around. And while things have been, pretty simple and easy this week, it's not always going to be that way. This is why I do go over those points as to where I'd be kind of cognizant of those ideas falling apart. So with that said, I hope that that's clear. I hope that that's all well and good. It's been a really fun week. Again, thank you for having me, and I'll be signing off now. I salute you. Have a great weekend, and until next time.